Look at that, the brand new intro. Look, Moore.
Look at that. I've finally made my debut.
And you're in it as well.
I'm in it as well, yeah. Instead of just like a little 5 seconds little clip, I'm properly in it.
Love it. And we've got music carrying on now as well. God, this is the brave new world.
This is it. This was Friday. Here you go. Happy Friday, everybody. Welcome to the show. It is Friday, the 25th of April. Nearly payday for most, I think. Nearly. We've made it to another week, and another week, and we're green. We're up again.
For the third day running, it looks like we're going to have a decent rally, thanks to Google.
Yeah, it does, which is welcomed, to say the least, I think, for most.
I'm still with the video. Anybody who's missed it, anybody who tunes in a little bit later, shall we have a look at the coming up slide, and then we'll go to the running video again?
He's very excited. He's made his.
I am loving it.
Made his kind of acting debut. So if you can watch it and see if you can pick out the bit where we acted, me, you, and Ronnie. There was a little.
That was a real trade.
Oh yeah, it was real trade.
Right, coming up today then. So what we got? You got myself and Luke Moore through till around about 8:30. Oh, we're going to have some music for this as well. This gets better and better. The guys have been properly at work here.
Here we go.
Right.
Opening bell through till, I'll be here till about 8:30. We're going to do a little bit of fast markets in there as well. And then we've got Mini Cooper is on with Ange at 8:30. Then Elliot is coming in. This is like, I feel like we're in some kind of, like a little jazz bar, just enjoying this.
Elevator music.
Yeah, well, it's a bit more funky than elevator music.
In a cool hotel, like the Hard Rock Hotel or something.
Yeah, it must have a name. What is the name of this sound? Do we know?
Oh, sorry, you've got to carry on. Right, 9:20 trading experiences with Aaron Bright, and then 9:40 Isar talking about the week ahead. That's coming up. It's like this morning, but cooler music.
And better looking people, and better content, and appropriate.
What's wrong with Dermot O'Leary?
Do you know, I couldn't even tell you who's on it now.
Yeah.
Is it still called This Morning? Or that was the old GMTV, wasn't it?
Richard and Judy, yeah.
Yeah.
Showing the age there.
So wait, which one? Hang on, does that mean I'm Judy then, if you're Richard?
Yeah, well, that's true. Yeah, got to be, doesn't it? Oh, dear, Julian, like the old music. Julian thought he was in a health spa every morning. Mature and loving the new intro, stylish, informative, not too demanding.
Not too demanding.
Not too demanding,
That's what we like to bring in the morning. Nothing too demanding. We don't want to take ourselves too seriously.
Oh, here we go. This new music is more lively and entertaining. Yeah, Angeline's saying a health spa with Rich and Luke.
Yeah, there you go. And Jesse.
Horrible thought.
Jesse, a glass of red wine instead of the morning coffee. Yeah, it does kind of feel like we're kicking back kind of after 5 o'clock, except it's 7:30 in the morning.
It's got that Friday feel.
Yeah.
How's it going to be on a Monday? That's the question.
Well, yeah, you'll have to let us know.
Let's see it again. Let's see the intro video again. On air, like it. Oh, bit of London. There we go. There's the studio.
There's the behind the scenes.
Oh dear, what a wally.
I was talking shop on the TV there. Here we go. Look at that. Real trade.
I am.
Real trade.
Oh, Tom did not like that. Oh, these are some great shots. Good. Right. Excellent.
There you go.
Back to work and focus, Mr. Moore.
What are we talking about? Yeah, the markets look positive. Good to see. Alphabet last night. Well, I mean, look, we're continuing this kind of wax on, wax off of tariff talks.
Gotcha.
And I don't want to say roller coaster, unprecedented, all this kind of stuff, but it is. Mm-hmm. It's a market driven by tweets. It's a market driven by sentiment. I put out text to my guys on Wednesday afternoon.
Right.
Saying don't forget, Wednesday morning we kind of started this rally. And it was all on the hope that there was going to be a deal done with India, or that China was at talks and all this kind of stuff.
Yeah.
And then if you remember, the market opened and Besant was on TV and basically said, guys, not really. And we came straight back down again.
There's nothing ongoing.
Yeah, so we're kind of still seeing that, really. So it's still a story-based market. It's still a market that's moving based on, is it happening? Is it not? Who are we talking to? Is there 70 people that the US is having trade talks with?
I think it's a bit more technical than that. I think the CTAs are short. The momentum funds were short, and you're now getting that closing that position.
That change in
They've been
sentiment.
caught offside, yeah. So I think it's pushed it a little bit far. Didn't think we'd see 5,500
this quickly.
So
I just think you've got to. It's amazing when you see all the investment banks going, "Oh right, well my S&P target now for the end of the year is 55." Yeah, well it just did that recently.
it's traded 48 and 55 within about
a week.
10 days. Yeah. Right, we've got Google numbers coming up. We'll go through the A to Z of those in overnight action. Right, so we saw decent numbers from Google, right? Let's go through them. YouTube was actually a small miss on ads.
Tell you what, I've got a fantastic screenshot.
Fantastic.
I've got a nice little infographic for the people.
Oh, yes.
Look at this. Someone went out and did their homework this morning.
Oh, I like that.
Yeah, it's good. This, to be fair, I remember talking with Ange about this when I did an All Sessions Open with them during the previous session. App Economy Insights on X, Twitter, is a fantastic site, actually.
Does it do for them all?
It does. It didn't do Intel, annoyingly. So I was looking for Intels as well.
Yeah.
Because they came out. It's a story of two different tech companies. You've got Alphabet that are seemingly doing very, very well, as some of these numbers we'll talk through in a sec. And then Intel is the opposite because it's talking about the austerity side of cutting efficiency, 20% of jobs being cut. But we'll talk about that in a sec. So on here, start from the left, you've got the revenue in blue. So Google's search is up 10% year on year. YouTube's up 10% year on year. Google Play, all the revenues up 19% year on year. Google Cloud, that's going to be interesting. So all the cloud services that we've been talking about so much with AI, with just processing, that's feeding into that. That all adds up to 12% year on year as a revenue.
The percentages are interesting, aren't they? So Google Cloud up 28% year on year. Then YouTube 10%. Google 10, overall only 12% increase. So I can kind of understand why it's on the rating it is, right? It got down to sub 18 times earnings at one stage. But you're getting 12% growth, albeit the profit was much better.
Yeah, so then you start to strip out all the costs. Of course, revenue of 90 billion, cost of revenue is 36. Gross profit then, it's a 60% margin. I mean, for a business that big to have a 60% margin is very impressive.
Well, what does it do? Put ads on an internet site. It's not exactly a highly costly
maybe
business,
not.
is it?
I tell you, it was interesting. I mean, what do you think the risks are now to a business like this, right? You can see two things. Clearly, if you've got a tech-based business that runs gets a lot of its revenue through kind of marketing, advertising, everything that comes with it. That's fantastic. What does that then mean for the Metas later in the season? What does that then mean for other businesses that do something similar? Or what does it look like when you start to think about the kind of second order effects of all these tariffs, right? What happens to the cost of advertising if all of a sudden your tariffs have been put out there for? Are you going to cut back in certain places?
Yeah.
So
well,
I think
they
that's
already highlighted the companies like Shein. And what's the other one?
Temu.
Yeah, they said they expect some effect there. But also Waymo. Waymo was actually a small disappointment. Then in passenger traffic, it's improved. 200,000 rides they were doing in February. That's already up to 250,000. But a much bigger loss. The loss was 1.2 billion. Versus only $1 billion in the last quarter. So
how much do you reckon that is with Tesla's full self-driving now in Austin and San Francisco?
Yeah.
So do you think that's biting into those margins? Maybe.
But when does that stop? You know, but how much do you throw on revenues of what were they? 90 billion?
90.
To lose $1 billion in self-driving cars when you're only in 2 cities, you know,
it's not great. But if you had, I always try and normalize these because numbers are too big for my small brain to understand. If you had £90 in your pocket and you lost £1, not the end of the world, is it?
Yeah, but that's not your profits. That's just your revenues. So your profits are what, 34? I don't know.
Yeah.
It's a relatively unexciting company on a interesting valuation.
Cheap or not?
Well, cheap because, I mean, I don't use it anymore.
You don't use Google?
No.
Not at all.
ChatGPT. It's the only way.
Search.
For any questions, like, okay, Google Maps, I'll use something like that.
Yeah, but still, I don't know if the AI
we're on
is. Yeah, we're on YouTube. Well, I use it all the time. The YouTube Premium, I think, is one of my favorite subscriptions.
Just because actual Google search I'm talking about, though.
Google search, yeah, it's my default search on my phone. It's what I spend every time that a client calls me and I need to just quickly look up something.
Do you know ChatGPT?
No. I'm probably 25% Perplexity.
Right.
Still 75% Google.
Interesting.
Yeah.
But it's... do you use AI on Google search?
No. How do you do that?
Exactly. They said that in the numbers. They said that they're seeing good uptake. 12% of searches are now on AI.
Oh, because they've got...
Didn't even realise it was there.
What's the AI called? It's called something like Gemini. That's it. Yeah, Gemini. So they've got something. I mean, I don't recall them shouting out too much in their numbers.
The competition's there, though.
Yeah, sure. Well, Perplexity is the big winner so far. Because what Perplexity does is it takes in search, it takes in ChatGPT, it takes in DeepSeek, it takes in all these different models and it kind of merges it together. And so I've got it as a Google Chrome. You'll use Google Chrome on your as your browser. Actually, no, you've got a Mac.
Get forced to.
No, but I've got it as a browser plugin. So you just click on it, search, and it's quite nice.
So that's Jesse 14. Will companies like OpenAI take market share away from Google over time? That's certainly what I find my own. Any decent search, Google's just not good enough now. It's got to be ChatGPT.
Well, it depends on what you're looking for, though, I think. If you're looking to figure something out that requires some form of computation, sure, AI is actually stepping forward. But if I just want to know, I Googled Intel's results, and I got the 5 different news articles that had pumped it out, and therefore I could see and read it quickly.
Yeah.
But you probably can use a Perplexity for that. In fact, I've already said on the show, the Perplexity Finance app is amazing.
Right.
Really, really cool.
Okay, well, that sounds like a potential poll for producer Phil to come up with, doesn't it? Let's get a producer Phil poll about Google. What do you use? Are you starting to use Google search less? We'll let him come up with a question too while we move on. So what a very interesting article in the front page of the Times today. Let's look at Larry Fink. Larry Fink is saying we're investing in undervalued Britain, and this is the most positive thing I've seen about the FTSE in a long time, saying that it's BlackRock's buying billions of pounds of UK assets and believes that it is undervalued, and building positions in UK assets across the board.
Interesting.
He specifically mentions Lloyd's, NatWest, even St James's Place.
Really? But okay, so I'm always a little bit. BlackRock, I think, gets a bit of a strange one in the retail investment space. BlackRock own iShares. iShares are one of the largest ETF producers out there. Oh, look at that, nice little advert. One of the largest ETF providers out there next to Vanguard. We've partnered with BlackRock for our Smart Portfolio project. So we manage funds using BlackRock's asset allocation research to then go forth and build these 5 different portfolios that people will invest in the long term. So this can be read in one of 2 ways. They already have huge amounts of assets under management passively in the FTSE 100.
Oh, no, he's talking about with his money, with BlackRock's specific money, he is buying.
Yeah, so this is what I mean. So the passive investment arm, which if you look on the shareholder register of most companies in the world, BlackRock's always like number 1 or number 2 because of this passive ETF arm. The flip side to that is then using their actual money management arm to go and tactically say, I want to be overweight UK. And that's what I think this is saying.
No, it is, yeah. And it's a big positive. He pointed to, just back up for a second there, sees Dr. Watson. He pointed to the increased speed of decision making at the CMA as an example of a more pro-growth agenda in Whitehall. I don't know what's changed, but it's a good change, right? This is...
That's the most interesting line in that whole article then, I reckon.
Yeah.
I don't know what's changed, but it's a good change.
Yeah, and we saw it with Vodafone. right? That deal with Hutchison was at risk, and it breezed through, absolutely breezed through, thanks to the Labour government change and the CMA getting the stamp of approval to be pro-growth.
Interesting.
So, for Larry Fink, look, this is one of the biggest, most important money managers in the world, and for him to be talking about the FTSE and stocks in it and buying across the board, this is the kind of thing you wanted back in November, December. He goes on at the end to talk about the US going into recession, and here we go. We've added to our positions across the board with the idea we believe the market was discounting too much negativity. We believe that was not warranted. So yeah, big stamp of approval from BlackRock for the UK and for the FTSE.
The FTSE's up 1,000 points in about 2 weeks. It's gone from 75 to 84.
Yeah.
7,500 up to 8,000. Oh, there we go. We're on the chart. Hang on a second. Let me just tidy that up there and give you...
Right, the poll, what are you using to search online? Google, AI tools, or other? What's in your other, Phil? Yahoo.
Yahoo.
Yeah,
Ask Jeeves.
Yahoo
Do you remember
Finance.
Ask Jeeves?
Ask Jeeves.
Ask Jeeves. That was my first entrance to searching on the internet.
Was it really?
Yeah, or Alta Vista was another old school one.
Yeah.
Alta Vista was when I was trying to download music via LimeWire. I used to have to use that.
Ask Jeeves. Yeah, jeez. That is, 118, 118.
Well, the old yellow pages when you have to just physically look up to find a phone number. Now you just type it in. Again, you Google it. Say you wanted to book I rented a car over the weekend, dropped it off at Enterprise at Waterloo, and they didn't send me a confirmation back. And so I'm worried, like, oh God, have they found, I scratched it or something, and they're doing some analysis. So
Do you really?
No, it's fine. I mean, I was worried, but I was totally fine. Google Enterprise Waterloo, comes up, click, call, straight through. I mean, you don't even have to think about it. That's why I think AI hasn't yet replaced that ease of service.
Yeah. Good. Right. What we got any UK stuff this morning? Retail sales.
Retail sales came in, 0.4% growth versus an expectation that it was going to fall. So slightly double-edged sword. The market last month had retail sales of 0.9%. So we are half of what it was previously.
Yeah.
But the market was genuinely looking for a 0.5% contraction, 0.4% contraction.
That's it. Yeah.
And we've got a 0.4% growth.
Big positive. So sorry, Phil's actually put the expected numbers up there. The actual figures have come out at 7 a.m. and they are 3.3% ex-fuel year on year. So the really strong performance there in retail sales. So you cannot stop the UK consumer.
No, that is the right number. Retail sales month on month was growth of 0.4%. It was. That is the correct number up there. You are right, though. The ex-fuel is 3.3, but the year-on-year figure is 2.6. Phil, you did it correctly.
Let's look at the right number in future. Right. So we've...
Should we have a little look at UK stocks?
What have we got later on in the USA?
USA, fairly quiet this afternoon. I think we've got some... there's a Michigan consumer sentiment out at about 3 o'clock. Otherwise, a fairly light day in terms of economic data.
Let's get retail sales back up. What is the number?
0.4% month on month.
Right, and there's the numbers. 1% versus minus 0.4 expected.
Okay. Well, our economic calendar's got it as 0.4.
Okay. Well, I trust trading economics. So.
Right.
Anyway, it is a beat, and that's the important thing. A strong beat in retail sales in the UK. Yes, what have we got in UK stocks? Chart off.
UK stocks, fairly quiet. 3 companies out in terms of large cap companies. Evoke, so they've come out with their Q1 numbers. They've said their year-to-date revenue growth is up 4%. and they've made no change to their full year 25 guidance, which is positive, I think, in the moment. We've got Mobico. They've announced the sale of a North American school bus business for an enterprise value of $608 million. They've maintained their guidance. So they've said they're expecting, sorry, no, they have not. They've said that they're going to deliver operating profit at the lower end of their guidance. Not good. And then WPP, which is
Publishing.
advertising. Whose company is it? It's
Well, it was the one that he used to work at.
yes,
But he's
left now, isn't he?
Yeah.
I can't remember the guy's name. Q1, they've said their current trading is in line. Like-for-like revenues down 2.7%.
That's it. Yeah.
That was it, Martin Sorrell.
Dr. Watson.
Like-for-like revenues down 2.7% on an estimate of 2.3%. They backed their full-year view. They are cautious around the tariff impact on their clients, which could run through to their company performance. Naturally, it goes back to the point we made about marketing and advertising spend. So they're starting to see that through. And that is it for your big UK large cap. So Evoke, Mobico, and WPP. Do you have any early calls on them?
Yeah, we're seeing Evoke up 2% expected. Mobico at market. So FTSE currently up 20 basis points. And then we've got WPP up 1%.
Okay, so pretty boring stuff.
Nick Feingold phoning. Shall we answer? Nick, we're just on air at the moment. Do you have a message for the viewers? You're on loudspeaker. So say good morning to everyone.
Morning, everyone. I think that I saw the best piece of research I've seen in 40 years on Tesla last night.
Right.
And
I'll tell you what. Send me it over, and I'll put it out to the viewers there.
yeah, but I think you could see the biggest short squeeze in Tesla and Nasdaq in history.
Right.
I think. All right.
Breaking news.
Fantastic. Nick Feingold, thank you very much.
See you later, buddy.
Good man.
Well done, Nick. You heard it here first.
There you go. Short squeeze coming in Tesla potentially. So a bit of research last night out. Let's see where Tesla closed the all sessions. 263, up 5%.
Yeah, but it's still come up. I mean, it's still halved in value, isn't it? I mean, I think we'll have to see what the research says, but Elon says he's going back to work in May, which is only around the corner now. And it's way off its highs, although it had some pretty bang average / poor numbers yesterday, didn't it?
Oh yeah, they were shocking.
Yeah.
Yeah,
So
I think you've missed a day.
I might have missed a day. It's been a busy. It's been a busy week. I may have missed a day. Yeah, that was Wednesday, wasn't it?
Yeah.
Yeah, it was. Yeah. We've also seen numbers. If you look across Europe, Safran, the kind of more industrial business, their Q1 adjusted revenues are up 17% year on year, and they've confirmed their full year outlook, which is good from them. What else have we seen in Europe? We've seen Saab. That can't be the same Saab, the car company, is it?
No, I think it's
AAB.
Aerospace.
It's a Swedish company, so shout out to Ronnie. Their organic revenues are up 12 to 16%. And then Saint-Gobain, which is the building company, I believe.
Building
the
materials,
industrial
yeah.
company. Like-for-like sales down a little bit, 0.3%. Market was looking down 1.8%, so that's good from
Basically,
euros.
sounds like a quiet morning.
How could you tell?
we now know that Tesla's going to have the biggest rally in history, but big shout out to Nick. Nick, of course, is we had as a guest on, but also started the broker execution. So Nick's been a sales trader in the city for about 40 years, I would say. So if he's saying that, then it's interesting. Not the views of IG, of course, and not the views of myself or Luke.
No. I mean,
I'll still buy them.
interesting. I mean, he actually said Tesla and the Nasdaq.
Yeah,
so that's more interesting. I think the Nasdaq piece will be interesting. I mean, I've got that. My long-term holdings all in Scottish Mortgage, so if anything happens to the Nasdaq, that helps my ISA handsomely.
Yeah, how's that? Has that?
It's been moving around. It's kind of not quite recovered as much as it is. I mean, are you pulling the charts up there?
Yeah, because I fancy the Nasdaq's probably bounced more than this has.
Yeah, so where are we? I think it might have done. I mean, bearing in mind, it isn't exactly the Nasdaq. So its biggest positions now are SpaceX and Mercado Libre.
Okay.
So it's not.
Ooh, that could be a good opportunity to get into Mercado Libre, actually.
Yeah, I like.
Should we have a look at that fast markets?
Fast markets. I do like Mercado Libre as a story. And they've just added Nubank. So Nubank is the equivalent of Revolut to Latin America.
Right.
And they are growing very fast. So Scottish Mortgage, for those that don't know, it is a investment trust in the UK, and it allocates funds towards what it believes are the world's best growth companies. Some private,
it's
some
like
public.
a good Cathy.
Supposedly, it's the British Cathy.
Yeah.
But they've been a little bit better, more successful.
Scottish Cathy.
It is a Scottish Cathy. Yeah. That Bailey Gifford.
As opposed to a Scottish Cathy, where you get heart disease. Right, we'll be back in 2 minutes. Luke Moore, the ex-Milky Bar kid, joining us for the opening bell.
No idea where this came from.
See you after the break.
Where this came from.
Welcome back, welcome back. So we got quote of the day, Luke Moore. Quote of the day is, there is only one side of the market. It is not the bull side, nor the bear side, but the right side.
Oh, God.
And I am not on the right side of this rally.
I've got another saying for you, actually. In my research this morning, I was just trying to look up this some story about the China tariffs, because, of course, you look on the FT and it's China are going to back off, and we'll probably talk about that in a second. But they're considering suspending the 125% tariff on some US imports.
Okay.
They basically turned around and said, look, the US started it, right? If you're going to do something about it, you need to back down a little bit. And they quoted, the FT quoted a Chinese proverb. It says, he who tied the bell on the tiger should be the one to untie it.
Oh, that's brilliant.
Ancient Chinese proverb. But basically, the one
I
that
wish
starts the
President
problem.
Xi had come out with that.
Yeah, basically, if you break it, you got to pay for it.
Yeah, but it's just,
You break it, you buy it.
it's some US imports because of costs.
Yeah, medical equipment, fuel. And there's another story that we didn't talk about. Apple are going to reroute.
Oh, yeah.
Apple are going to reroute a lot of production through India. But we need to speak to the market about the bell.
Now, what could be
we
sponsored
doing?
by the London Stock Exchange in the future? It is there.
Are we punting for sponsorship?
Friday we are. I'm doing my best to say the part of the show that could be sponsored by the London Stock Exchange sees BP starting the day up 90 basis points. Come on, BP, give us a Friday rally. Burberry up 60. Kingy's up 0.5%.
Burberry was up again yesterday, wasn't it?
Yeah, back above £7, but what a fall from the £12 that it was.
Sure. Vocon News is up 4.7%. That's out of the gates pretty early. What else do we have news in? We had no...
WPP up 1.5, so Sir Martin Sorrell's ex-company. Aberdeen still without vowels on its ticker.
Oh, well, they've given the vowels back, haven't they?
Yeah, we got to get that updated, I think. Scottish Mortgage Trust, that's what I would like to buy.
Get above £9. Go on, there you go. Get above £9.
I wonder if we can get in the middle there. Is it worth trying to put something in at a lower price on the platform? Order size. Oh, it's gone higher. Monkey Man jumping ahead of me.
£9. Yeah,
right. 1,000 shares at £8.99. Try and get them on the bid there. I might have been a dick for a tick there.
Oh well, see if you can get them. What else are we looking at up there? So there you go. There's that St James's Place that you mentioned. So I wonder whether that is in some kind of basket following that BlackRock discussion, that BlackRock article.
I think he was just saying that it had seen this fantastic rally and a bounce from the lows, as we saw in like the likes of Legal & General, 25% before you got ex-dividend yesterday.
Yeah, incredible. Yeah, the amount of people that we had calling up yesterday morning going, Legal & General's down 6%. What's going on? I'm like, well, 5% of that was dividend.
Biggest dividend in the FTSE.
Yeah.
Kingfisher, up 60 basis points. We've got the Pru. So it's much of a muchness. A lot of stocks up between 0.5% and 1%. Shall we see the down moves? That'll give us more of a outlier feel.
Yeah, the only other one that we spoke about in terms of news, that sale over at Mobico, down 2.8%. You remember they said they're going to deliver their operating profit towards the lower end of their guidance. So down 2.8% there in terms of stories.
Okay. Vodafone back under 70 pence. I really want to get my hands on that JP Morgan note. Napster, I know that you're trying to get your hands on it. Let me know if you find it, or if anybody else has seen what their argument is in 62 pence price target. Let us know.
That was yesterday, wasn't it?
That was 2 days ago.
I saw it yesterday.
Is this something to do with the Arsenal game?
I've no idea. Maybe.
ASOS up 4. We've got John Wood languishing down below 18 pence. Sorry.
I think it's just getting no love. Absolutely no love, John Wood Group.
Do you want to have a look in Europe, sir?
Let's have a little look. So we've got, let's see at the top there, we've got Keyring up 2.6.
I'm tempted by that one. How did that get on yesterday? Because it was down 5 on the open. Let's go to a 5-minute chart. Now, yeah, look at it. It's got back everything. That was a buy on the open yesterday. Guess the market cap. Were you watching yesterday?
I was.
Yeah.
I was.
Was that it was 18 billion under what you would have thought?
I would have just had it at like 30.
Yeah.
I thought it would have been 30. For a brand, for the conglomerate of brands that it has, you would have expected it to be bigger than, what was it, 18 or 12 or something like that?
18?
Yeah. 18.
So, but then I completely ignored that and didn't buy it, and then just watched it rally 5%.
But why did it rally though? Because the numbers were not great.
I would imagine just
technically,
or the fact of they're now another set of numbers closer to maybe getting out of the woods.
Yeah, I mean, the luxury space, I think it's going to be under pressure until the trade talks get resolved. We know that China are a big buyer of luxury goods, regardless of where they buy them from, etc. The consumption is, China are always some of the biggest buyers.
Yeah.
So unless you see a ratcheting down of these trade talks, I think people that are allocating capital towards themes are going to be allocating away from these types of Chinese domestic consumption stories.
True.
Until it changes.
Yeah.
So yeah, great. There's been a technical bounce on it, fantastic. But I suppose similar to an LVMH, I'd love to own LVMH. I just think they've just got such a phenomenal business.
Yeah.
but you're probably not going to do it all the while that you're not sure what the consumption story looks like. So we'll wait and see.
I might go and have a look on the options desk. That was somebody's question yesterday. Was is it? It was away from the numbers. Maybe think about an options trade, and that's fair.
Selling what? Selling puts.
Selling puts in Kering. I'd also sell puts in Adidas. I think that 190 level, it's had good supports, decent numbers. I just worried a little bit that Sambas are getting towards the end of their life in terms of new sales.
I saw someone wearing Sambas yesterday, and someone that I was surprised was wearing Sambas. I can't remember who it is.
Ward?
It wasn't. I don't think it was anybody in the office.
He's a bit too big. Samba's quite a thin.
Quite wide-footed. Yeah. I mean, I've not got any. Have you? It kind of skipped by.
It's too thin for my feet.
Yeah. Okay. Yeah. It was just a phenomenon a year and a half, 2 years ago.
That's it.
It was like you would see the baggy jeans, the Sambas, and that was like the uniform in London. Everywhere you looked at.
Yeah. So Adidas. I'd actually sell a Strangle. I'd sell a 250, 190 Strangle. Take the premium. I think it trades between those two.
Well, the high of 260 at the start of the year, down to 18. So yeah.
Yeah. JD Sports. That was the one. So JD Sports with the retail sales that producer Phil was completely correct about this morning.
Yep.
With JD Sports, I think I've got a Andrew McKelvey's idea the other day. I like Nike. I like Legacy Adidas. Mm-hmm. I think New Balance are great. I've got my New Balance on today.
Ooh.
JD Sports.
Yeah. I mean, potentially. Again, it's a domestic consumption story, JD Sports. Mm-hmm. Are we going into
US? 40% US.
Okay. But it's more a case of it is a very retail sensitive subject. Don't forget, yes, the number was 0.4%. It wasn't a contraction, but it's also half what it was last month. So it's not a pretty picture. It's not quite
3.3% year on year.
Ex of fuel, but just in terms of the
overall... fuel in JD Sports, mate.
There is no fuel in JD Sports. Yeah, great. Great. I just want to flag Mobico, by the way, on that, what we're now seeing was a bit of a downgrade, is now in a volatility auction to the downside, down at 8.6%.
What?
Yeah, Mobico Group.
Wow. I mean, I don't know anything about them, but...
No.
It doesn't sound like great price action.
I'm going to guess Mobico. Was that not the old hand your mobiles in and recycle company? No? Hang on a sec.
Ask ChatGPT.
Mobico. We're going to get complete egg on our face. Mobico Group, formerly National Express Group.
Of course it is.
National Express.
One of the best trades that I have ever been handed on a silver platter. It was, I was across New Zealand, and the new CEO had gone into one of the banks to present this like stand-in, CFO. Mm-hmm. And he said to everybody, the sales team in this bank, he said, look, yes, we might go bankrupt because of COVID, right? Because there's nobody traveling.
No one's traveling at all.
However, our underlying asset value is our buses. If we ever get out of COVID,
we've still got...
We can sell all our buses to the new company.
Whoever it is.
And that's worth £1.50 a share. And the stock's at £1. So I've got 50% upside value just in the value of my buses alone.
Even if we cannot continue to operate, the asset value is 1.5.
£1.50 a share. And my stepdaughter has just put all her life savings into the stock. He said that to a bank, to a sales desk. Jeez. And so my buddy phoned me, just went, look, just FYI, we've just had National Express and it sounds quite a compelling story. It must have gone up 25% in 3 days.
I'm not surprised.
Yeah.
I'm not surprised. It's almost like Basant having a conversation the other day with the guys at the JP Morgan conference going, oh yeah, by the way.
Not happy about that.
No, not happy about that in the slightest. Good thing that we've got Twitter and X and the news was able to get circulated so quickly.
Yeah, Bloomberg had a source in there.
Yeah, I know. Crazy.
Preset. I mean, I like that a lot.
Anyway, Mobico's still in an auction, not yet out, now indicating down 8.6%.
Well, that's more interesting actually. What's happened? What's wrong?
So let's have a look at the story in a bit more detail. Do you want to bring
the graph?
Oh yeah, you're on the platform there.
Right. Let's see. So this, it's back down below where it was.
Bring the news up. Let's have a little look at the story. Just see if we can get the summary.
Hang on. Let's just look at this COVID move there.
Oh, it's that, isn't it?
So, sorry, get it in. So there we go. It dropped from £4, obviously COVID. It got down to 66 pence.
And they reckon the book value or the asset value is £1.50.
And it went straight to £2 within. This is the daily chart. 1, 2, 3, 4, 5, 6. Within 7 days, it went from £1 to £2. It's like the best trade of my life.
Nice. Did you hold on to it for the whole time though?
Of course,
did you double your money and run?
Maybe £1 to 160, something like that. You know. Yeah. Right. Sorry. So I was looking at what on earth is going on there at the moment. You wouldn't expect National Express to be such a disaster.
We are out of auction, and we're down 10% now. So zoom in on this. So to sell the North America school bus unit for $608 million, it's become too costly to run due to wage inflation, and potential costs from US tariffs. I wouldn't have put a bus company down as a tariff sensitive, especially it's not like they're trading any goods and services across borders unless they purchase all of their buses from China. Offers bus, coach and rail services. It also expects 2024 adjusting estimate earnings to be at the lower end of its forecast. That was the point.
Well, that's a huge profit warning, isn't it?
185 to 205, and it was previously. No, they're just saying it was down at the bottom.
That's dollars. Right. Let us know if you've any view in Mobico.
What else is going on? Melrose are at the top of the FTSE 100 today. They're up 3%.
Right.
So Melrose are at the top. Pershing Square, Entain, and Intercontinental Hotel Group. They're all at the top of the pops in the FTSE. We've got Scottish Mortgage there. 904. So you're on side. Did you get them?
No.
God damn it.
Tick for a tick.
At the bottom, we've got Endeavour Mining, Unilever, Rightmove, and Diageo at the bottom of the pops, all down just over 1%.
Yeah. Good stuff. Right, let's go to a quick 2-minute break and we'll be back with Fast Markets.
Welcome back to Fast Markets on this lovely sunny Friday.
Yeah, on the Friday.
Come on the Friday, Phil. I've actually not been on a Friday. I don't think. This is my first Friday. Normally this is Coop's seat. He's coming in a minute, but this is normally Coop Dog's seat.
Yep.
So it's nice to be back. Yeah, sorry, Coop Dog is what we call Mini Cooper on desk.
Doggy dog.
Coop Dog. Because we had this whole junior senior thing going on, and we can't do that apparently. HR say no.
Now, away from the numbers saying a significant loss for the year primarily due to goodwill write-offs. This is National Express. Derecognition of deferred tax assets and onerous contract provisions related to its German operations.
Morningstar.
Doesn't sound great. Now, talking about AI, I believe you've got an AI.
Yeah, so this I have no idea where this has come from, but Ronnie started something vicious, and he spent the morning yesterday creating this on ChatGPT of all places.
Now, if that's made you laugh, then please,
High quality content that we're delivering you at 7:20 in the morning, 8:20 in the morning.
Like and subscribe. Get the sorry, I'm just seeing the question about the markets dipping. That's right. The Nasdaq did just come off, didn't it? And FTSE as well.
See if we can get a story. In the meantime, whilst Rich has a little look at that, please don't forget to like and subscribe. This is the new channel. We're pushing it. You guys are here. You're with us every single morning. Fantastic. Thank you so much. Please drop us a like. Please subscribe. And we'll do the best for you whilst we're here.
I mean, it's not a huge drop, right? But we it looked like it was Nasdaq related. We dropped from 55.20 to 55.05. Look, I think we're too high. I think we're...
It's China. China's foreign ministry have said that the US are not having any consultations or negotiations on tariffs. So that came out a couple of minutes ago. China's foreign ministry have said, nah, not happening. So again, look, it's what we said at the top of the show. This is a market that is being driven on headlines and stories and hope and wax on, wax off, right? All the while that is the case, we can't account for headlines coming out like this. So as a trader, you've got to try and figure out how do you manage the risk of this happening? Because it's going to happen, right? On both the upside and the downside. So to me,
having had the run that we've had and the S&P or the US still looking up 40 basis points
for now,
I don't know.
Yeah, but the FT has been running the story, that negotiations are happening, they're not happening. The story I saw this morning, China tells, if you want to pop my screen up, and I'll pop it on the full screen for you just there. This was a story that the FT was running with this morning. China tells the US to cancel all their unilateral tariffs if you want to talk to us. So they're saying it loud and clear. It's just, these discussions they're going to be based on rumors, tweets, what journalists are hearing, what they're not hearing. So just be aware this risk is out there.
Yeah. And, let's take a look at the short-term rally that we've had as well. So that's the 30-minute chart from Monday. Of course, the US markets was open on Monday. They don't like holidays across there.
They don't like holidays, do they?
Nah. So it could be a day where you could be at work earning more money.
Yeah.
So we've rallied from 5,100 to 5,500 in 4 days. Is now the time to be buying on Google coming in? So the actual EPS beat was 227 versus 201.
Well, it's 10%. It's not bad.
Yeah, that's why you manage your numbers though, isn't it? Generally.
Yeah, I suppose it is. I mean, to me, this is a chart where the market is looking for a reason to bounce.
Yeah.
It's been desperate to try and find that good news story. And China have just come out and at least poured a little bit of cold water on it so far.
Or a little bit of realism in that all we've rallied on this week, well, there was the Powell talk, but the Powell talk should never have been. So let's go back to Friday, Thursday of the week before. So 5,300 is the realistic number. And this was just the Powell kerfuffle that was nothing. So 5,300 with Trump saying the next move could be de-escalatory.
Well, I think both sides are realizing that I don't think they're in a stalemate, but they realize that we are inherently linked.
Yeah.
You know, you've basically got all the services that the US have built and all the manufacturing base that China have built, and they're both slightly wanting to rebalance that, or at least it's been driven by the US, but they want to bring some of the manufacturing back, everything that comes with that. You know, it's not that easy to just change where your factory is. You know, it's fair play to Apple to have this story that we're just about to talk to. I mean, Apple have very quickly said that they're going to move their manufacturing away from China. And I thought was to India, yeah.
Yeah.
Now, I thought what was interesting in this story, if you scroll down a little bit more, it gives you the split of, you've gone a bit too far. And there you are, right at the bottom there. The US accounted for about 28% of Apple's iPhone shipments in 2024. So a third of all iPhones are going to the US.
Yeah.
I thought that was quite a big number. It seems, to me at least, it feels like the phone market is a duopoly. Samsung, Apple. I mean, of course, there's now China who have Huawei, and they're making good progress. But I would have thought that the US would have been less than 28%. So I thought that was a big number.
Yeah.
But if you can now spin that out into India are subject to 20% tariffs, I think, at the moment, not the 145 or 60 or 80 or wherever we are at the moment.
Yeah.
For Apple to be able to turn around and say, we're just going to reroute it all over here, well, they're going to have to hire staff. They're going to have to build facilities.
I thought the whole point of this was to build
in America.
You know, with all those skilled
people with their little screwdrivers.
Yeah.
with their big hands and their little screwdrivers.
So shall we have a look at the moves from last night just before we get close to this open? You know, where are these? I don't think we've got the moves from yesterday, do we? Is that so?
That'll be the since yesterday's close.
Okay. Right. So yeah, Alphabet up 4.8, Meta up 4 on the back of it.
Well, that's the advertising story, isn't it?
Yeah.
It's the advertising story. You know, you go back to the numbers for Alphabet, and their ad revenue was up 8% year on year.
Mm-hmm.
So if their ad revenue is up 8% year on year, what does that then mean for the rest of the industry?
Yeah.
I imagine, what does SAP do today over in Europe? Because they're going to be another tech-based company. No, they're not really up at all, actually, 0.1%. So you'd expect, or maybe we would have expected more of a read across on that. Or what was the other company? I think Atos as well is another European tech-based kind of platform company, similar-ish to Google. They're down 3%. So, you know, I think you're in a bit of an area where perhaps the impact of US forward ad revenue is not quite as bad as we think it might be. Or at least immediately in the aftermath of the results.
At least it was in Q1.
Well, yeah, true.
Yeah.
True. Yeah.
What has happened? Talk about backward-looking information.
Yeah, very true. Well, you're starting to see it, right? Was it who was it yesterday? American Airlines removed their forward guidance. You're starting to see that where forward guidance is being removed.
Yeah.
On these, you know, we don't know what the market's going to look like. We don't know what tariffs are going to look like.
So we have Clifford Abrahams coming on the show on Monday. So that's of course the CFO of the mighty IG. So that is a question I'd like to put to him actually. As a CFO, obviously, how do you have sympathy for your compadres in the US that are having to look at numbers and just think, what do I do? What do I say on a conference call when it comes to that situation?
Well, what do you say? You cannot. Companies plan their spending years in advance, especially a manufacturing company like Apple. Okay, IG is a little bit more of a service-based company. I don't know what our run rate looks like in terms of where all the resources are being planned, but one would imagine that a company like ours is probably a little bit less sensitive to tariffs than some of these other companies. So it'll be interesting to see what he says. But if you know that,
I'm not going to be asking him about IG guidance.
No, of course. But in terms of like how they approach things,
if you were an industrial or CFOs that you meet, then there's 3 options. There's put your head in the sand and pretend it's not going to happen. there's withdraw guidance completely, or what we saw in COVID more and more was an ex-COVID number.
Okay.
Right? And so an ex-tariff number, this is going to be us. But
But
with tariffs, a tariff-adjusted number.
Yeah. Oh God, I remember all of that stuff. It was COVID-adjusted EBITDA, wasn't it? Which is just like, who knows what's going on?
Right, any stock you want to look at specifically, sir?
Well, we spoke about Mercado Libre, didn't we?
Yes. Good
Meli.
memory.
MELI is the ticker. I think these are quite interesting. The reason why I think these are quite interesting is they are a growing... comparisons have been made to the Amazon of Latin America, right? In the sense that Amazon started as and still are really, a shop, right? They've now expanded into services like Prime and delivery, everything like that. That's exactly what Mercado Libre are doing. So they're now providing financial services across Latin America, and they're growing at a rate of knots. Now, the story is...
What a great pair trade.
But where does all the Chinese cheap goods go?
Right.
China and Mexico and Brazil, and I don't believe there's any tariffs on there. If there are, I don't know. But there's probably a reason why this thing has bounced back to all-time highs pretty quickly, shortly after tariffs have been announced.
Yeah. Because that was a great pair. Why weren't we all over that one? Why was I looking at Glencore when I could have been looking at Mercado Libre?
It's an expensive stock, though. It's $2,200 a share. Like, it's an expensive stock. It probably could do with a stock split just to get that cost down to allow people to trade it. But it's an interesting story, because if you think that Chinese cheap manufacturing goods are going to need to go somewhere, is Latin America a place for them to be? In which case, a distributor like Mercado Libre could be a big winner there. I think what's really exciting about these guys is, the infrastructure across Latin America was never set up. The quality of roads isn't very good. That last minute delivery that you would expect and we take for granted here in the UK is much more difficult in rural areas across Latin America. So they have built that distribution network, and they can use that to then provide services to other people that are trying to distribute. So they're really interesting, actually. They're really interesting.
What kind of valuation are they on? Do you know, should we have a look at? Oh, look at that. 13 strong buys there. This sounds like a pension one at the very least.
A long-termer.
Yeah.
2,400. Where's it trading now? 2,200?
Yeah. So, yeah.
But you're allocating to it
20% upside.
Yeah, you are allocating to it basically at highs, though, so just be aware. But it's a cool story. It's a cool story, one that I like. There's a fantastic podcast, actually. Again, I found about these guys through Scottish Mortgage, because they're one of their holdings. And there's a series of podcasts that they've done interviewing the founders of their constituent companies.
Okay.
And Meli was one of the first ones they did, and the CEO is just so cool.
Right.
He's so enthused and he's so energetic.
Was he the founder?
Yeah.
Oh, brilliant.
Yeah,
okay.
it's still a founder-led business.
Oh, thanks, guys.
Which is interesting.
Yeah. Excellent. Good. Look, plans for the weekend?
I'm going to say gardening, but I've got a balcony. So I've got like 5 or 6 pots that I need to redo and sweep up and re-oil the deck that we've got like a tiny bit of wood on the floor. So I'm going to try and make the most of a free weekend, well, a free Saturday, and then support my best bud who's running the marathon on Sunday.
Oh, brilliant.
So that'd be good fun.
Marathon Sunday, of course it is.
Yeah, so that'd be fun.
Right now, Mobico down 20%. Let's take a look at that. That's...
Oh, God, look at that.
Yeah. Derecognition of tax assets. We need to look more into that, don't we? Don't like the sound of that.
Derecognition of tax assets.
Yeah. Right, excellent. Angeline is coming up next. She'll be with you in a couple of minutes. Go and grab a coffee, make yourself a tea, and goodbye from the Milky Bar Kids.
Bye-bye.
No, what was his phrase?
Well, I don't know. It wasn't me.
The Milky Bars are on me. He almost got it.
The Milky Bar.
I don't know. It wasn't me. Same thing.
Goodbye, everybody.
We'll see you shortly.
Hey, welcome to the show with myself and Minnie Cooper,
Thank you for having me.
who was in a poll yesterday voted as favorite presenter here at Trade Live with IG.
Wouldn't you be very upset to hear that?
Phil was not true, but it was actually Phil that said it was his favorite presenter.
Thank you very much, Phil.
He said he made it up.
I'm all happy now.
Phil was trying to be diplomatic. Let him have it. He says, welcome to the show, everyone. Good morning, Boston. Frank saying I am going long when regular trading starts at 9:30 a.m. EDT. I have a good Friday feeling out there as well, although we are not seeing some of the big sort of gains that we've seen in the recent session. Let's have a look at some of the earnings that have come out. Minnie Cooper, you want to kick us off?
Let's start with Alphabet. So Alphabet reported last night. Again, I've got my notes here with the stats on. They reported significantly better than expected results for the first quarter. Shares were up more than 4% in post-market trading.
Look at that.
They reported revenue of $90.23 billion US, which illustrates a 12% year-over-year increase. This result exceeded the consensus expectation of $89.1 billion US.
I mean, it's a big move there, and no surprise, right, given by that boosted dividend and also that extra 70 billion, was it, the buyback? That's a huge...
I don't know the number off the top of my head.
Huge number. But also the other thing about its shares, you can see that it has now come up, and we are seeing this uptrend there. I'm going to draw it for you because that's probably easier to see, giving you the trend line there and making sure we do not pierce above the wick, as it were, point to point. That might be better. Can you see there? So we're now in this new uptrend, and 2 touches is considered good, but we need a third for confirmation from a technician's point of view. I quite like the safer but later.
And do you think this third could be coming at some point today, or?
Well, if we see a lot of volume come in, and we are now less than 30 minutes from all sessions as well. Bearing in mind, though, what we've seen since the beginning of this year is we tend to see lots of people try to exit the market before the weekend, right? That's a pretty new trend. No thanks to Trump tweeting at the weekend. So, yeah, I mean, I really am very enthused and was very excited by the Alphabet news as well, because it does show that their advertising ploy, their strategy to pivot into advertising is clearly working, right?
I think obviously Alphabet own Google, and you've got Google Search. Now, I was reading, I think it was last night, I was reading how Google Search are basically a monopoly with respect to search engines. Obviously, you've got Bing and other companies. However, Google is the main one. But I was reading how people are now moving over to like OpenAI, ChatGPT, and using that instead, which you could argue is a drawback for Alphabet, but it could potentially be an opportunity in the long run if they do invest more in AI and do make more developments in that space.
Totally. And you seem to have read Phil's mind, because producer Phil, we have a poll, don't we? This morning we had a poll on just that. What do you use for search? Here are the results. Drum roll, Minnie Cooper. Read them out.
So we've got Google at 65%, AI tools at 24%, and other at 10%. I'm intrigued. What's other? Is that like go to the library, or?
Yeah. Phil, enlighten us as to what... He's saying Yellow Pages one way, we're pulling our legs there. But, you know, seriously, lots of people on the chat. Someone said Gemini earlier. I'm surprised no one's actually come up and said, you know, Reddit. We always have very controversial comments whenever anyone talks about Reddit here. Away from the numbers, saying I use AI over Google. Which one, please? ChatGPT. I like ChatGPT as well. It seems to be improving, don't you think? Away from the numbers, every 2-3 months or so, it seems to do another leap. We've been testing it here quite regularly. Do you test any of those?
I do use ChatGPT. However, for Google searches, for searches, sorry, I shouldn't say Google searches. I do use Google.
Yeah.
I just find it
It's
easier.
just easy.
However,
Just go to one place.
if something's more complex, then I potentially use ChatGPT because it can break it down for me easier.
Yeah. There's also, of course, Bard. We've been testing Bard as well. Any of you trader friends have used Bard? Please let me know your thoughts, because I'm not so sure Bard's that good compared to ChatGPT, but it might have become better. We even did a test to kind of, I think it was Chris Beecham that ran it. Give us the top 10 most difficult Bach music by ranking and why, and it had a good go.
What was that? Sorry.
Top Bach, the composer, pieces.
I didn't know who Bach was.
By ranking.
Yeah.
So anyone who loves playing Bach loves the technicality.
Yeah.
And give it in terms of ranking from the hardest to the easiest in 10 and explain why. And actually I read it did give a good go, right? And extremely quick. I mean, you'd be, studying for ages, or you'd have to be really...
Save a lot of time.
Yeah. So also seeing some comments there from Boston. Frank, are you actually messaging from Boston? If you are, it's very early there, Frank. President Trump and his cabinet making stock prices go up by saying positive things.
Yeah, so Trump basically said that they're in talks with China, but China is saying, no, he's not. So it's interesting, but it's pretty clear from what Trump's saying is he wants to come to some sort of agreement and reduce tariffs on China.
You know what I think is going on? I think this encapsulates what's going on. I'm going to try and show it to you, people. You tell me whether you think this is what's going on in the background. Right, show up my screen right now. Have you seen this one? Oh, there we are. I'm trying to zoom it in for you. There we go. Do you play poker?
I don't know.
So just showing up my screen there, that is the meme that was sent around yesterday. And it's interesting too, because it's around, I believe, the beginning of next month, when all those pauses that Trump has put in place, on tariffs.
Oh, yes. Yeah.
Deadline is then, right? And so I think China's going to sit pretty till then and see what Trump's next move is, or whether he'll fold.
See, but yeah, Trump's, it's not gone as he would have expected, to put it that way.
Yeah. Right, so let's move on. So we talked about Alphabet already. What do you want? What's up next on
Let's talk about Intel.
Okay, let's do that.
Okay, so again, Intel reported last night. They were down just over 5% in post-market trading. One of the main reasons for this is because the CFO said the current macroeconomic environment has created elevated uncertainty across the industry. And for the second quarter, so for this current one, Intel projected revenue of $11.2 to $12.4 billion, which is considerably below the analyst estimate.
Yeah, and we're also hearing producer Phil, thanks for the heads up, Intel CEO saying, come again, Phil? CFO? Tariffs are increasing the chances of an economic slowdown. And he's not the first, to be fair, to say this.
A lot of firms in the US have said that. But I mean, lately, like in the past 2-3 days since Trump has announced that or indicate that he may want to, do a cutback on tariffs, we've seen pretty good performance. So S&P, NASDAQ, Dow, they've been up quite a bit this week.
Yeah.
Particularly from where they were a few weeks ago.
Lots and lots of companies have warned about this tariff issue. I mean, the airlines, we've heard from them as well. Also, not forgetting the car companies. There's, the list goes on and on. We've got even now chocolate makers, the Barrick Hayabus. If people are going to travel less because of uncertainty, all sorts of consumption is going to get crimped, right? Sorry, go on.
I was going to say Intel, as everyone knows, lately, well, in 2024, they were down 60%, and really, really fell behind, particularly in the AI space.
Yeah.
You've got competitors such as like Broadcom, Nvidia doing really, really well. So it'd be interested to see how they perform for the rest of the year. But given these tariffs, it's not looking good.
Yeah, it's not looking good on the technical front as well, because if you look at the swing highs here, and I'm going to draw another line to show you what I mean, because it's good about being very specific. I hate it when someone says, "Can you see this?" and then they don't draw it out, so you don't see it. You have to imagine it. If you look at this line here, and what I'm trying to do is I am touching the two lines on top there. Even though there's a bit of a slant, it doesn't quite, it's not a big issue, because what we're trying to see there are the double tops. And the double tops just show, yes, there's enthusiasm, you know, the likes of Mini Cooper coming in and scooping up Intel stock right at that 190 mark there. And it went up, but then people sold off, right? People sold off, and we see that, oh, there's some bag holders here, and they sold off. And then a few more people came in, but it was a second, can you see a second attempt? And we failed that retest.
And then back down again.
Yeah. And when we have the third touch, which is when we say the power of three is good, because the third touch is confirmation, that, especially in a downward line, will then show that we see real exhaustion, and it's likely to go further down. And I have the volume up, down at the bottom, because I like to see this confirm by stable or high volume as well as that happens. Because sometimes if it's low volume, it could be a false signal. Great, so that's Intel. You wanted to look at airlines as well.
Airlines,
Yeah.
but you touched on airlines earlier. So American Airlines reported yesterday. That was at 12 p.m. UK time. And in pre-market trading, they were down 1.3%. So they provided a downbeat profit forecast for the current quarter, and said there was too much economic uncertainty to maintain its full year outlook, like many of the other companies reporting lately have. However, the results for the quarter that ended the 31st of March beat Wall Street expectations. I think with the airlines and the airline industry as a whole, it's quite cyclical and dependent upon the economy. So when there's a recession, which there could potentially be now, you would tend to see that consumers would rather cut back on traveling rather than groceries, as an example.
Also, American Airlines, RSACS has asked quite often about, whether now is the time. Andrew McKelvey as well, or one of our loyal viewers on the show, asking, is now a good time? I think this is about 3 weeks ago, to go into airlines. Now, when things are uncertain, we don't necessarily go, oh, I'm going to book a big holiday, right?
Exactly, yeah.
Yeah, so we start to kind of hold back on these sort of bigger spend items. And they asked Andrew, and I think RSACS as well, and many others asking, but oil is still very low, prices are low, should that not kick in at some point? And my humble opinion, especially looking at this sector in this particular point in time, and looking at the chart as well, from the left to right view, that shows you a clear downward trend. And now the focus, the mood music for this sector is on the whole tariff uncertainty and consumption.
Because as an example, I know obviously American Airlines is in the US, but let's say IAG, EasyJet, last year they both had good years. And now I think it's more dependent upon what's going to happen with the tariffs. Obviously, since COVID, they really, really struggled in COVID. But since then, both IAG and EasyJet have made a very good comeback.
Yeah.
But just in the past few months ago, it's come off a bit.
Yeah.
And I think their performance is going to be dependent upon what's going to happen with the tariffs. As if they do stay where they are and don't fall, then that is very likely, in my eyes, to lead to a recession.
Yeah. And if you look at IAG, as you rightly said, similar pattern being seen there.
Yeah.
We saw that COVID turmoil, and then the revenge travel kicked in.
Yeah.
And now we're seeing the tariff uncertainty start to affect these stocks. Right. So this is a really good one as well. If you like airline stocks, do bear in mind as well that the European ones tend to sometimes lag the US ones in terms of price action. So if you're trading both, then keep that in mind. And we did have some earnings recently, or some comments from Boeing. Is that right? I think that's right. Am I right in saying we had something from Boeing recently?
So I was reading with Boeing how China initially agreed to buy Boeing planes.
That's right.
However, they have now gone against their word, right? Which is fair enough because of the tariffs, and they're not buying the Boeing planes which they agreed to.
Yeah. So let's have a quick look at Boeing there. Don't forget as well, China making their own planes as well. I have not tried them, but I have seen reviews of these planes and
Good reviews?
apparently good.
Like the cars?
And the cars. We'll come to that in a second. I haven't yet got the chance to drive a BYD or the Hyundai just yet to test drive them because they've let me down, Mini Cooper.
They've let you down? What do you mean?
Down. They let me down. I think they messed up. So Hyundai was meant to pass me the EV9 to test drive. And then as we got closer to the date, they sent me a message. Wardy was really excited because he drives an EV9. So it's like, oh, you know, messaging me. And day before, they just said, sorry, you know, this car unfortunately doesn't have a tracker. So every car has a tracker.
Yeah.
You know, in case
Gets nicked or...
in case I do a runner with the car, which is crazy because like every car, even like older versions, they've got so much tech in them right now.
Yeah.
There's got to be a tracker, right?
I thought you'd just be able to have like a test run with someone.
No, because I wanted the car for more than a day.
Oh,
and my
okay.
insurance basically stipulates every car has to have a tracker.
Yeah.
This one, they said, didn't have one or hadn't been.
Nuts.
It's fishy, isn't it? So I went over to VW and they happened to have an ID Buzz. And so I test drove that. And so it's good to know what Volkswagen have, you know, and it's just hit the market recently in a big way, especially the souped up version. Drove that through country lanes. What car do you drive?
I don't have a car.
Oh,
I used to have a Ford Fiesta, but
good car.
I live in Bermondsey and it's quite built up.
Yeah.
And I live next to a tube station, so therefore there's no need for a car.
Yeah.
Particularly because my insurance would probably be a lot of money.
Everyone's saying, not a Mini.
Sorry?
Everyone's saying, you don't drive a Mini.
One day. Get a John Cooper Works one day.
Now, lots of people here also on the viewer base here talking about, you know, what they drive, what they like, what they don't like. Please, if you've got some good ideas, because I'm looking for my next car. And I'm also using it as market research as well for the stocks that I like trading. Do let me know.
I was going to say, if anyone in the comments has drove a BYD, please do let us know your thoughts on it.
Yeah, tell us about the BYD, because BYD also let me down, as I said, because I'm still waiting for them to send me a message to say, hey, you know, come test drive, right? I have seen a lot on the streets of these BYDs. Producer Phil, what did you say? Are they made by BYD? Phil's saying you saw one this morning, a London bus, electric London bus, made by BYD, because they make other vehicles too. And last weekend, I saw a seal,
A seal.
a seal. They have all these funky names. Trying to guess some of the names. Phil, maybe we should have a poll on BYD names and which are real and not real.
I'll go with penguin, otter, polar bear.
Wombat. We're just reeling out names, and then there's one that is real. So he's reeled out penguin. I've come up with wombat. And then what else?
Polar bear.
Polar bear.
Otter.
Seagull. Feels like we can wrap now. Back to BYD.
BYD are reporting later today. I don't have the exact time. However, in previous quarters, they have reported between around 10, 11 UK time. So it may be around them, but we are not sure. Got some stats on BYD here. So in 2024, BYD reported 29% year-on-year revenue growth. Full revenue was 107 billion US dollars, whereas Tesla was just under 98 billion US dollars. They recently launched a new electric vehicle that has a driving range of roughly 340 miles and starts at a price equivalent of $16,524, which is considerably cheaper than Tesla.
It's a lot cheaper. And I can tell you as well, because I was doing market research with the great Porsche guys, sales showroom. Now is a great time to go and speak to these people because they have a lot of time. They tend to have a really, really quiet spring period because their customers have been whacked by expensive ski winter holidays, and then they've also paid for the summer holidays, so that this period is like they're really free. Anyway, they are also looking at this incoming competition with a close eye. Check out BYD's share price here because you hear me talking about a pair trade in the first quarter of this year between BYD and Tesla. If you put that on, BYD gained around 46%, whilst Tesla went the other way.
I'm pretty sure that BYD will close soon, given that it's listed in Hong Kong. I think from memory, maybe around 9 a.m. So in 4 minutes or so when that market will close. Obviously, it's completely different hours, so usually it'd be open when us in the UK are asleep. Out of interest, what's the client sentiment on BYD at the moment?
Let's have a look, shall we? Client sentiment before we have to go. There we go. Have a look. Read that out, Mini Cooper.
I still can't see it. There we go, 60% long. In the last hour, 100% buys. And this month, that is 58% buys.
Yeah. So, you know, big. And I'm sure if you saw, you know, Tesla, it'd be like slightly, a very different picture, should we say.
Yeah.
Right, we gotta go because this is a hard wrap, but stay here because we have volatility with Elliot coming up next. Hey, straight into all sessions with myself and Elliot Harris. Welcome on board, Elliot. Let's get straight to the numbers. Looking at the winners board there. If you can see my chart, take us through the winners. Got Reddit, Alphabet, of course, up more than 5% there after those earnings. And also Meta up a huge 4% there. Tilray, Snap, Soundhound AI are also on the winners board. Any of those names take your fancy, Elliot? Got Tesla.
I was having a quick look at the Google. First time we've seen actually the users of the AI overview, or AIO. 1.5 billion monthly active users, which is quite a punchy number.
You know, the other big thing about Alphabet is it's really showing that it's really navigating that advertising space really well, and from the A to N to N. So not only do they give you the advertising and create the advertising and generate that revenue from themselves, but they also, with all this data, they also provide the cloud services. So it's a really good ecosystem. Changing on to the losers list now. Got JD.com down 1.7% after, I believe, some gains earlier in the week. A bit of a bounce there. BioNTech down more than 1% as well. Lululemon a bit in the red there. And NEO down 1.67%. eBay. You do a bit eBay, Elliot? Or not your style?
I used to back in the day. Not so much now. Not so much now. I did back in the day.
It just takes too much time, doesn't it?
I was a buyer on that side, definitely.
I was a seller. Oh, we make a market.
Oh, well. There you go. There you go.
Yeah, let's have a quick look before we get to the vol news. Just making sure our viewers are across the board. So we've had the all sessions open up, and it is looking like a risk on day. On the board here, looking at indices, Germany up 0.5%, FTSE pretty much flat there, but it has seen quite a few gains. Tech 100 bouncing there, as well as the US 500. Right, volatility. Are we going to see the volatility that we've seen recently, the 30s, the 40s, carry on into next week, Elliot?
For me, it feels like, are we over the worst of the pain? I think that's kind of what the market is kind of suggesting. Are we past the worst of it? What VIX is now, let me just get it out one sec. VIX is now 24 on the front month. That's off quite significantly. Yeah, I don't think, for me, I think we're going to stay here. I think we're ready to almost stabilize again and sort of put it past us. Obviously, we've got the, how many days left now? It must be 75 days left or something until it all kicks off again, if you like. But for me, yeah, I think we are going to stabilise. I don't see vol spiking within the next week.
Is this a new normal, though? I mean, we saw that spike when we had the initial tariff tantrum reaction, and then it sort of petered towards that 30, 25, 28 band. And then now we're seeing it at the 24 handle. But speaking to Jack and Paolo yesterday on the vol desk, look for you, couldn't find you. Maybe you were on break.
I was at home. I was at home.
Tending to your Death Watch beetles.
The perils of an old house.
Any ideas as to how to get rid of Death Watch beetles? Please let Elliot know, because he's got a few, shall we say. So looking at this, is this a new normal now? This is the point that viewers are interested in. Is this the new normal, that we remain quite elevated compared to, for example, the lows of the 18s and the 16s?
Definitely, yeah. So I can't see us going back sub 20 for quite some time now. I think, yeah. Traditionally, you might have said that, say, around the 15 mark, 15 or 16 handle was probably the norm. For me, that's probably going to shift towards current prices here. So 23, 24, I think we're probably going to stabilise at, certainly for the next couple of weeks, I think.
Yeah. I mean, what I'm basing my trading view on is that we see that there is that elevation next week, possibly with the earnings news, possibly a relatively positive week, not super positive, because I think a lot of the earnings will be a yes but no. So yes, meet or beat, but then there's some comment that comes out about tariffs and it's going to, push or really kind of like put a negative spin on those earnings. And then the following week, gloves are back on because that is potentially when Trump's pause on tariffs hits a deadline.
Yeah, and obviously you've got some stories coming out at the moment about the US is. You've got a deal and you've got an understanding. And Besant came out last night and said that we are very close to reaching an understanding with South Korea. But okay, a deal and an understanding are two very different things. Now Trump might stand up there; it will look great for TV. We have an understanding with this counterparty, this country. I think they said that over 90 countries have actually reached out to certainly have some trade-related talks. But having an understanding is basically an agreement. Let's have a meeting.
Yeah.
Actually, getting a firm deal on the table is very different. Yeah, so I think there might be a little bit of a grey area there coming from the Trump side. He'll be very quick to portray a success, but perhaps actually once you actually drill down into the nuts and bolts of any chat that's been had, how much has actually been achieved?
The whole thing about the dollar as well. I mean, he can afford to have the dollar weaker for a bit, especially in the first part of his term in the White House, of his tenure, because, we all know that it's the last year, the last 6 months that really matters. Are you seeing that capital inflows will start returning to the US at some point, and this is then going to boost the dollar again?
Kind of following normal economic flows. I think that's the market expectation. Yes.
Yeah. That's why we
dollar's
have
been
this
very
presidential cycle, don't we? We talk about the...
Always finish strong. Yeah, for me, I think we will return back to usual capital inflows, which can only be good for the dollar. But for me, that's probably 3 to 6 months further down the line. I know there's some comments about exactly when are we going to see a cut in June. For me, it might come slightly too soon. Any effects of the tariffs, I think we're probably not going to see feeding down into the jobs market until probably July. And obviously the Fed are keeping a very close eye on the data. For me, there's nothing in the data at the moment to imply that there are job cuts on the horizon quite yet.
I'm just going to, as you're speaking, flip up the options ladder for the S&P. Taking a look out to the weekly expiry, 28th of April there, and just checking to see still around 21 there, and the skew is to the downside. Do you expect this changing at all?
The skew will always be on the downside on indices, but very much on S&P. I'll just give a quick shout out actually to our for those clients that trade S&P options. I'm hoping that you've noticed that our pricing has been significantly improved over the last 2 to 3 weeks. I've undergone a long-standing project to actually improve this, so it's enabled us to tighten spreads as well. So we're far more competitive, very competitive against the underlying market. I would say that at times when the vol did actually blow out over the last 2 weeks, we've actually been tighter than the underlying marketplace. So you are in the right place if you're trading S&P options. The flow's been fantastic, so it's all been very, very good over the last couple of weeks. So but in terms of the skew, yeah, the skew's definitely eased. Vol's come off significantly. You probably this is a Monday contract. You've probably seen vol come off on this by 8 or 10% versus 2-3 weeks ago.
That's right. And let's get Elliot back on screen there. The project that he's undertaken has been so severe that, prior to this, he had a lot more hair. But now...
you can almost chart it. Yeah, you can almost chart it kind of from when I got married, about 28. Yeah, that was... yeah. My wife said that that was my excuse to actually get married because I'd peaked, so to say, but hey ho.
I love this look though. Lots of people have come up to me and said, you know Jason Statham, we've seen you with him. Like, that's Elliot.
I'm very rarely this clean shaven.
I love it. Love it. Let's talk about tariffs. Talk about this a lot here because, you know, we're seeing this almost like a poker game play out, right, between China and the US. No one wants to play chicken, at least not yet. And we talked about, you just mentioned that everyone, you know, come to the negotiation table. That's the what Trump really wants. And yeah, I truly believe, I agree with SR as well, that he likes using tariffs to do this. But it's also the fact that, you know, China is also able, it's one of the countries that are able to just kind of sit pat and let things unfold until it feels the situation is right. I was looking and crunching numbers yesterday. The amount, just in terms of its own retail sales, this is just in China in the last year, compared to how much it exports to the US, it's like 11 times. 11 times. And we're now seeing, yeah, we're now seeing Alibaba, Tencent, all those outfits, you know, making mood music to say that they're going to support firms, there are funds that are being created to get them to sell more domestically, right? And that Belt and Road project that they started many years ago to try and redistribute.
Yeah, for me, Trump needs to be careful because last time that you had tariffs kind of banded around in the 70s and the 80s, the US dominated, for me, a lot more than it currently does. Yeah. So I don't think the rest of the world quite need to say exactly as much as it did back then. So it's a fine line he's playing. Yep,
fine line indeed. Lots of questions coming in on the chat as well. Away with from the numbers, saying, hey Ange, question for Elliot. Nvidia IVR at 15.7. Any thoughts there?
It's eased slightly. For me, I don't look too closely at the individual equity options.
I'm just whacking at the chart here.
Managed by a different desk. I'd probably have a little bit more of a view on Tesla perhaps, but yeah, for me, Vol has definitely come off slightly. Skew, I think, remains slightly to the top side. I think that's eased somewhat over the last month or so as well. But yeah, no real strong view on that, to be honest.
Tesla, you mentioned that you've got a view in Tesla. We've got lots of Tesla traders watching this. Right. So
yeah,
here's whacking Tesla up for you.
Let me just get up myself. It's easier to see on my side. 1 second. Bear with me. Yeah, so obviously we now got to June. We've taken some hit. For me, I think we're going to stabilise around here for the next 3 to 6 months. Okay, so yes, the vols drops. The company looking around about maybe 60%. You can, if you sell, you can either sell a straddle, which you will receive more than if you sell a strangle. For me, I'd be looking to play a range. I think that we're going to stabilise around where we currently are. So I'd maybe looking to sell maybe the 200 put and maybe the 350 calls, somewhere around there. Those are kind of the key levels that I have in my mind.
Okay, another question coming through. At some point, could Elliot explain how options pricing works on the SB platform, on the spread betting platform? So if you want to type this out,
probably that's probably one.
Longer
Let's get me on for a wider session where I can actually go through that, because very quick, very hard to do quickly.
Okay, we'll talk about that one and next time Elliot's on. I'll make a note of that for you. Away from the numbers. Thank you very much for those questions. Well, how much time we got, Phil? Because we've got two very cool charts from Elliot, which I want to show.
Yeah, if we can basically focus on gold and silver. Obviously, gold at the moment, that's the real king of town, if you like, at the moment. Vol is absolutely flying on that.
I'm going to show the chart first and then show the options ladder. Here's gold. Right. It has come off slightly. But
come off slightly, yes.
Yeah. Still an uptrend there. Very
probably
strong.
A little bit of profit taking. If you think that gold is up 50% in the last year, okay, so this breakout that we've kind of seen started in March 24. Now, silver generally lags any breakout rally of gold. Okay, various reasons for this. Now, for me, you can break it down into 4 phases. So phase 1, you see the gold price breaks higher above its last cycle high. Silver doesn't react. Phase 2 is gold can outperform silver by anywhere between 3 and 35%, say, and we are kind of in between those 2 phases. Okay, so gold, and can you bring up the charts actually?
Yep. So let me bring up the first one that you're talking about. Here we are. Here we are to the right. Here we are. Got it up.
Thank you.
Yep.
Right, so this is the implied vol, gold v silver. Now, gold implied vol, yeah. So for me, you can see that this is silver divided by gold. Okay, so silver vol will generally always be over gold vol. Currently, the ratio is roughly 1.5. Now, you're getting towards the lows of the historical relationship, if you like. So kind of your average is probably 1.75, 1.8. Currently, IV is roughly trading at 1.5. Now, given the rally that we've seen in gold, and given that if you have a look at, say, the last 4 or 5 decent breakouts over the last, say, 40 or 50 years, silver definitely takes a little bit of time to kind of catch up, if you like. Once it does catch up, it can then outperform gold by 2 or 3 times. So for me, we're at the end of phase 1, coming into phase 2. The IV is reaching the historical lows. For me, it's a lovely time to be buying silver calls. So a trade that I have been looking into and pricing is buying out of the money silver calls and funding that by selling some gold puts. I think it's a really nice time. If you actually bring up the next chart as well,
Yeah, here we are.
Showing the realized vol. Yeah, so you can see that the gold realized vol is again at over, say, years higher. So versus the silver, it's kind of in the middle, if you like. So for me, there's a lot more action to come on silver.
Yeah.
And given that I can't see the gold rally stopping anytime soon, I think it's a real nice time, yeah, to step into silver.
I like
So
this.
I'm not allowed to give tips.
Yeah.
But it's a little hunch that I've got.
And also, this is what the the charts are indicating. I do really like this chart because, and as a technician, I always ask, this is the entry, this is the exit, but what would change my mind, right? So looking at this, does the thesis hold until the silver, the black line, crosses the gold line? Is that how this indicator would work for you?
You can see that generally on this chart, once silver RV matches gold RV, it kind of stops there. Silver RV doesn't really like being over gold RV too often, and you can see that. So, okay, bar say best part of a year ago, it's kind of always lagging just behind. But for me, there's this gold rally has a lot more room to the top side. For me, we've not seen the step out of equities from hedge funds and things like this into gold quite yet. So I think there's a lot more momentum to come. And I think once that does, it really opens up 35, 36. I'm even hearing comfortably 4,000 by year end. But that's on gold. Silver, the options market hasn't reacted quite yet in terms of the implied vol. And also the spot hasn't reacted in the same way either. But if you have a look at these breakouts over the last 40 or 50 years, silver always catches up. So, I've actually done that trade as well. I don't quite get the time that I used to, but I've actually stepped into the market on this. Nice.
And this is also really a good one to note for those. I know that Rich has come out of his gold trade. Lots of people who shorted recently are now kind of looking for the next, pivot point. So maybe silver is the place to look at. We only have a few more. How much time we got in the gallery, guys? 1 minute to go. What is sort of the big trade in the coming week that you're looking at other than silver? Are we likely, for example, to see more action in the DAX and the FTSE whilst their US counterparts are shaking it all out?
FTSE's been fairly tariff-proof, to be honest. FTSE vol's quite considerably under DAX vol, to the tune of roughly 8 or 10%. DAX RV during the frantic 2 weeks, if you like, was very well bid. So for me, it won't take a lot to kind of get DAX very excited again. I would say that the second week of April was probably worse than COVID, which I really didn't think was possible.
Yeah.
But yeah, for me, DAX has got a little bit more. Yes, it's recovered a hell of a lot. I wouldn't be surprised if we continue that momentum higher.
Elliot, do you think that markets are increasingly, I mean, we've already had CEOs saying and warning that these tariffs are going to cause that R word, recession. We've heard that, more and more these days. Do you agree with that that tone that markets are increasingly now, taking that on board, that risk?
It's very much the Fed's job to stop that from happening, to stop these tariffs causing inflationary pressure. Now, Trump's obviously been very critical of power over the last month or so.
And then roll back?
Sat in his hands when he shouldn't be. Yeah. Yeah, for me, I think the Fed's in a tight spot. It really is. Will we cut in June? I'm 50-50, to be honest.
Yeah, it's going to be an interesting one. I think, I find it really odd, Elliot, that until now that the markets haven't quite put a Trump mouth discount on what he's saying, because we've had this so many times, haven't we? This whiplash, and surely at some point markets are going to start becoming more numb to it. But we're still seeing,
Yeah, I don't think with markets aren't getting quite as excited as what they were. So I think they're beginning to learn, if you like.
Yeah. Well, there are clear shifts out there. Thanks so much for the heads up on the DAX, because that's one I'm keeping an eye on, especially on a technical view here, because it's climbing back to try and retest the level seen around mid-March there. Not quite there yet, but edging closer. Right, we have to go and wrap right now because we have Aaron waiting in the wings. Aaron, our Sachs. I see your question and the one from yesterday as well. There are loads of ways to invest in silver long term. I will get back to you on that, but we have to go to this break right now. Stay with us. Thanks, Elliot.
Thank you.
Hey, welcome back to Trading Experiences with myself and Aaron Bright, talking about volatility again, but from a longer term perspective, because we just talked about the option side of things with Elliot. Aaron, markets can go on. Well, I know you're going to say, you're going to talk about that FT article about markets cannot go on like this, but in my experience, markets can go on like this for longer than one thinks.
Well, yeah, I mean, the article I sent you earlier was basically saying it's not sustainable for sort of investors and traders to be experiencing this much volatility, or it's not something we're used to. But in terms of the rhetoric that we're getting from various institutions, governments, Wall Street in general, there hasn't been a huge shift in sentiment from an economic and policy perspective. So I agree with you with regards to that, in the sense that markets can't go on like this, but they unfortunately could go on like this. That's what the article should be headlined as, I think.
You always know when there's really high vol, when you get simultaneous messages, and I'm sure lots of you trader friends have seen this in your inboxes too recently, like I have. Like Hargreaves Lansdown sent one out in the last few weeks, and it read something like, markets can go up and go down very fast in volatile times, but keep calm. And you may be worried, right? But don't worry, keep calm.
Definitely, it's trying to sort of sustain that long-term investment time horizon, because during times like this, it's really easy to just say, well, I don't like the volatility, I'm going to sell, when it's usually a poor decision to do that. Yeah,
because then you don't ride the sine wave, as they say, when it corrects. And on the longer term, these smooth out in the end and look like small blips in the longer term curve.
I mean, if you look at a max chart of the S&P 500 or any market cap weighted index, or even price weighted index, you'll see that all these crashes, that you can see them, but like the actual magnitude of them relative to if you'd stayed invested for a 5, 10, 20 plus year period, it's quite insignificant. I mean, Terry Smith at his conferences, he's a very famous long-term investor, runs the Fundsmith Equity Fund. I mean, and he really shows that with his fund and just general indices that of course, when you're investing in equity markets and there's systematic risk, there's going to be a sell-off. If you're diversified, you are going to be experiencing downward volatility in your portfolios. There's not an awful lot you can do about that, unfortunately, because it is systematic. Most asset classes, I'd say, are affected. But if you are patient, you often are rewarded. And we even saw that a couple of weeks ago we saw markets absolutely plummet when Trump was making his Liberation Day announcements. And then a couple of days later, we had 9.5% in a day, which is sensational. I mean, something I haven't really seen for a while, not since the COVID days. And I think the moves weren't quite as big then.
I'm glad you talked about COVID, because guess where, I mean, we didn't plan this, but guess where my cursor's lined up? That's a case in point. During COVID, I did, for a split second, trader friends, if you did this too, please let me know, because I like to hear your thoughts. For a split second, because I just come back from a business trip from Asia, so I already started hearing about Wuhan even before, and COVID, even before anyone here even knew what that word was. And so when it all broke out here, Phil saying, was I monkey zero? No, I was patient zero. Prefer monkey zero.
Was I? I've got a WhatsApp group with my friends, and one of my friends was in Korea at the time for an extended period, and that was one of the first places. So he's like, "Oh, there's this virus going on in Korea. I'm sure it's nothing." And we always just say, "Well, I think you jinxed it. I think you're the reason. You said it's going to be nothing, and now look what happened."
Exactly. Yeah, and I'd like to say, Aaron, I'd like to say that the responsible investor in me, I'd like to say that the technician in me held back and thought, you know what, this is going to be a blip in the long term. Don't panic, Ange. You're going to be fine. No, what? And I didn't change my investments, and I just held. What actually happened was unlike most people whose kind of work generally went down, my work just skyrocketed, and I wasn't one of those that was allowed to work from home. In fact, they cleared the whole 13-story building and then chauffeured me in every single day and chauffeured me
You're
out.
considered a key worker.
Bloody hell, it's crazy. I mean, there were no facilities workers there. I mean, we could have been trapped building and it burnt down and we all been killed. But anyway, and also schools were closing down. It was a complete and utter nightmare. I could not get any groceries, no eggs, no nothing. I was with you guys in the NHS. Any of you medics, I was with you. So I couldn't do anything. I couldn't actually physically sit down at my laptop to do anything. And I thought, I'm fighting so many fires. Luckily, I didn't do anything. And so here we are now, looking at the chart. And you're right, it's a blip in the longer term trend. And perhaps this might be the case this time. Lots of questions coming in. One of them being Centrica from Steve Davies. Let's have a look at Centrica a moment there. Saying, I know this is a boring, you're talking about the price action. I mean, this price action does not look boring to me. Here we are. Looking further to the right, this is the weekly, but let me try and make sure that we've got the weekly view there. If you come off my chart a bit, it seems to have skewed to the right, James, and I'll try and reposition this. There we go. Does not want to comply. Why is that? This is the weekly chart. Let me come out and re-log in because this is a bit of a glitch at the moment. Here we are. So Centrica is actually one I am interested in because it is a good sort of stable, I believe, dividend paying stock. And it's seen as a defensive as well. Do you like Centrica at all, Aaron?
I mean, it's you know, an interesting company.
Here's a daily chart.
It's one that, you know, we will have exposure to in our portfolios, but obviously we don't pick specific stocks. But as you said, yeah, these sort of stocks do sort of, you know, the really super mature companies, you know, they're almost like bond equivalent equities, I guess you could say. Certainly some of them. I mean, this one, I mean, there's got a significant amount of price action, as you've seen. And obviously, if we just take a look at the fundamentals, I was actually expecting a little bit of a higher yield, to be honest.
Me too.
Because to be honest, in corporate credit markets and in certainly in you know, UK treasuries, UK gilts and US treasuries, you can be getting sort of in excess of sort of 3.5–4%. But the PE is looking sort of quite attractive there, you know, relative to I'd say the broad index of the FTSE, which is probably around 12.
Yeah, and it's one of the strong and stables, right? Like, a bit boring, but you know that's why we see lots of people trade. You know, the banks, Lloyd's, for example. Let's have a look at the chart first of Centrica there. And as Steve Davis pointing out, you know, we're hitting a level not seen since January 2024 now. And Steve Davis saying it's got momentum behind it. Steve, I would also urge you to look at the volume, though. We are seeing this nudge higher on lower volume. So just, you know, bear in mind that if you're seeing a move like that in low volume, just keep an eye out because it could be a false signal. Let's just see what the RSI is indicating here for us, because that's also a good one to have up.
Just another note on this, I'd say that these sort of stocks, you know, the kind of utility stocks, sometimes they can be quite volatile if there's a weaker economic activity.
Yeah, that's right.
So that's also from sort of a macro top-down perspective, which is kind of how I often look at the world, you know, rather than sort of from a stock picker's handbook. That's something to look at, you know, when constructing a portfolio, is to look at the top-down macro as well as obviously the bottom-up fundamentals.
Yeah. Totally, and also, of course, you know, supply and demand as well. RSI there, Yeah, not above the 70 line yet. Steve Davies. Steve Davies, do you have a Reuters account, like a private account? I am interested to know because you seem to get alerts that I sometimes get as well from Reuters. But yeah, parent company of British Gas, founded around 1800, if I have got that right. National Grid, just showing that one to you as well, because this to me falls under the same category as Centrica, and it's not doing too well in this session at the moment, but just having that added to my workspace there. I hold National Grid, and I hold it specifically for that reason. Bit boring, but I'm not going to get too hurt if the market turns against me. And if
How
I click
chunky is the yield? Oh, a little bit chunky.
5%, right? So
Yeah.
I like it when the dividend yield is above 5, right? Sometimes if it's too strong, say, well, you're not going to get that amount anyway, but above 5 to me is kind of like...
I mean, from my point of view, I'd say if I can get a better yield in a gilt, I mean, why would you take the equity-like risk? So, I agree with you there.
Yeah. So these are just like some of the key things that we look out for. So let's talk about, the Trump, come off my chart now, people, because what is also key is, as along with markets cannot go on like this, a lot of investors are asking, what should we do now? What everyone has a different risk perspective. You might be someone who is rather young, or you might be someone who is about to take retirement. So those are very different perspectives. Talk us through each scenario whilst I get your next chart up.
Good financial planning and good investment management is to really lifestyle a client's portfolio, whether that's you doing it yourself as an individual building your portfolio, or the portfolio manager or financial advisor doing it on their behalf, providing that's they're looking to draw down income from that portfolio. For a longer term investor, these bouts of volatility are frustrating. They can be new. I mean, I remember my first time I experienced market volatility. There was a period where everything was just going up, and I was thinking, well, this is wonderful. I mean, I'm going to put more and more in, and then obviously you get periods where there's stress in the markets, or there's volatility, or there's macro concerns, or there's geopolitical conflict, or there's economic issues, and you get volatility. You get equities and potentially other asset classes selling off. But if you've got that long-term time horizon, as we saw with that image of the S&P 500, it's a blip. Yeah, you can see it, and if you invested all your money at the top, it would have taken you a little bit longer. But it's quite unlikely you would have invested everything right at the peak of the market. A lot of people do tend to drip feed their money in or make contributions over time. But you would have, if we're looking back at sort of historic examples, you would have for sure, been able to recover your losses and build back more. And those for sort of shorter term horizons, if you're drawing an income, it's unlikely that a suitable investment portfolio will include large chunks of it being in the equity markets. You'll need an element of it to provide sort of capital growth, but when you're drawing income, capital preservation becomes much more of an issue.
Yeah, that's right. And don't forget, of course, if you are still making contributions through these volatile times, including into pensions, you would have been buying into the market at a time when your money can stretch further as well. Right, Yvonne, we have to leave it there. We have coming up a special treat for all of you. ISAR is coming up to let us know what to look out for and what to trade next week. Stay with us. Hey, welcome to the Week Ahead with Issa and myself. Always good to get you on, Issa.
Thank you. Yeah, excited to close out the show.
I know, right? It's been a mad week.
It feels like it's been a mad week, but also like I look back and I can't pinpoint any specific particularly chaotic moments. It's just felt like the whole week has been a bit chaotic.
Yeah, and like when I get a message from my brother who thankfully works in oil and gas, and for
Why thankful? Oil and gas prices not doing very well.
not doing very well, but thank you. But here's the caveat: he works for a government-backed
Okay, that's much better.
oil and gas company. So and so he doesn't like get the volatility thing.
Yeah.
And I have this picture that I kind of send to everyone, and we go, "How's your week, Ange?"
Yeah.
Whack up the picture for everyone to see. It looks a bit like this.
Oh wow.
The momentarily terrifying, which I'm quite pleased because the source is Bloomberg
That's a
there.
crazy chart.
Yeah, Aaron also saw it and sent it to me, and I was like, yeah, that's how my brain feels at the moment. Great.
This looks like, you know, when you have a child who's like drawing on the wall.
Yeah.
It's like this is like what your wallpaper will look like.
Yeah, with two pens.
Crazy.
Yeah, but great for options traders.
It's true, great for option traders, and I do think it's been a period where I think depending on what your kind of your time period and time frame to look at is, there's been lots of opportunities for dislocation in the market.
Yeah.
I guess looking to next week, I think the
let's have a
fun does not stop. So
Wait.
we actually have a slide which we can pull up, which has some of the stuff from the week ahead.
Ooh.
Ooh, yeah. So there's two big stuff I think worth thinking about. There's earnings and then there's some macro. So maybe if we start with the first two bullets here, which are all about earnings, we have some big US tech names. So coming out of the earnings from Google yesterday, which were monster beats, like huge beats. We have Microsoft on Wednesday, we have Meta on Wednesday, we have Apple on Thursday, and we have Amazon on Thursday. So 4 out of the Mag 7, like straight up next week. We've just had Tesla and we've had Google. So that means there's only really one big player left, which is Nvidia after next week.
Yeah, and I think I was messaging on the train coming in this morning. Apple is at the cusp of the following week, right? Have I got that right?
Apple is Thursday, I believe. Yeah, so it's towards the end of next week.
Yeah. So let's kick off with. Shall we kick off with Alphabet first? Do you want?
Yeah, let's maybe pull. Do you mind pulling up
Yeah.
the stock price of,
Yeah, totally.
of Alphabet? So Alphabet beat on revenue slightly, but they had a massive beat on EPS.
Yeah.
And actually, when you looked into the numbers, a lot of their growth rates were like really, really material. We actually had not quite as strong a cloud segment growth as we expected, but we saw really material growth in their ad revenue, which is such a big part of the Alphabet story. And I think
The gamble's really paid off, you know?
Right, and Alphabet's really been beaten up actually, and so actually you can see such a look at that. Wow, look, it's a pretty material move.
Yeah.
I think it was obviously a great earnings for Alphabet. Yeah. What I would say is their CapEx still looking extremely aggressive. And I think there will come a point where some of these companies will have to start actually absorbing the effect of some of those really high CapEx spends. But for the time being, with very strong growth in most of their major segments, including cloud, I think it was a great earnings for them.
Yeah, and the other thing too is look at what the what the technicals are showing, and that is, amid Alphabet boosting their dividend by 5%.
And share buybacks.
Yeah, $70 billion.
Yeah,
I mean,
the numbers are kind of mind-boggling, right?
Yeah, when I saw that, I was kind of like, this is.
I think this was definitely the kind of thing where the press release was written by someone who knows exactly what markets want. We had a top line beat, we had a bottom line beat, we had a boost to dividends, we had a boost to buybacks. It was
really they were a markets person.
It was like clearly a thoughtful earnings, and I think given the period of time where Google has been quite beaten up, it's definitely like not a surprise. I think especially with a lot of the kind of lawsuits that are going on at the moment, they might be forced to divest things like Chrome or look at their marketing ad stack. I think the market was really, really looking for some good news, and they got it.
Yeah. So Alphabet Key, when you think this is teed us off for a good week ahead, or do you think there's going to be?
No, it depends. So we've got Microsoft and Meta, I think, are two of the biggest names on Wednesday, and then we have Apple and Amazon. So of all of these, maybe it's worth just, yeah, exactly, spending a moment on Microsoft and then a moment on Apple, because I think those are two very different stories over the last kind of couple of months. So I think Microsoft's story is really a story of making that hyperscaler business grow and allowing that to kind of power the wider capital expenditure that they need to do in the wider business. So actually, Microsoft has been one of the main beneficiaries so far of this AI boom. And whilst a lot of the service providers may not be making quite as much money as they'd like, or a lot of the model companies aren't making quite as much money as they'd like, Microsoft is doing pretty well in terms of its cloud business. There were some stories a while back, and actually you can even see them in the chart, where you had some concerns in December and Jan around whether they would have fewer leases for some of the chips that they were planning on buying, or GPU centers they were planning on buying. And I think that there was a bit of worry there about whether that would be kind of a material change in the growth outlook. And if you look at the Azure business relative to Google, it's a much more mature cloud business, likewise with Amazon. And so I think this is going to be an earnings where I'm going to look at, is the growth rate maintained, and are they going to give any guidance? Because I think if we look at a company like Microsoft or Amazon, like AWS, for example, has been a juggernaut for a long time, and now players like Google are kind of catching up. And so the question is, can these hyperscaler businesses continue growing at what has been quite a breakneck speed?
And I think it's all going to be, Azure AI.
Yeah, I think we'll hear there was
Azure AI.
It was like the AI earnings. It was AI.
Yeah.
I think.
How many times did they say AI in the first 5 minutes?
I do think it's kind of calmed down a bit though. Like if you compare where we are now versus maybe 6 months ago, I suspect the AIs per minute has halved.
Yes.
And I don't think it's gone, but I definitely think people are paying a bit more attention to the actual numbers and the actual revenue that's being generated from this stuff.
Yeah. The froth has calmed down
slightly, yeah. So we'll see. I think if I was going to guess, I think Microsoft has probably had a very strong quarter. I think the enterprise business is quite a stable business. You're just very unlikely to see people make material changes on a short time horizon. But the guidance will be where I'm kind of looking out for. So if that's Microsoft, then the other big tech names are Apple and Meta. I think Apple is the one that's more interesting out of those two. So Apple has been whacked as part of both the tariff uncertainty, but also the fact that they've kind of missed the boat on some of this AI stuff. And so I think you're in a position where actually Apple's numbers have not looked as strong as maybe they would be expected to look. Shipments of the most recent iPhone have not been as strong as expected. So I think I will be looking at that revenue number and trying to see, are they in line? Are they beating? Will they provide any guidance? Apple's famously a bit shy around providing guidance sometimes. So I think I would be more interested in hearing some of the kind of Q&A and soft signals that we're getting from that, because we've kind of already seen some of these delivery numbers.
Yeah, and they have been whacked again and again, and the complaints that their phones have pretty much stayed the same, right?
And they've been whacked.
And just bigger.
Look at their PE ratio. If you go to the fundamentals.
Yeah.
They are still an expensive player, and they are not someone. Look at that normalized PE of 31, give or take, and they haven't been growing at the rate of a company that has such a rich PE ratio. And so I guess for me, I don't know, Apple has been hit. If they have some bad earnings, do I think there's risk of further downside? Yes. If they have good earnings, do I think there's risk of lots of upside? I actually think with the uncertainty about tariffs, it's hard to see them really accelerate to all-time highs, but I might be wrong on that. So I think it's one that I'm definitely watching.
The other thing too is, do you have Siri at home?
I don't know. I'm actually an Android
Oh, right. This is cool, because I'd love to ask you how certain Android things work versus Apple, because I do have a holding in Apple.
Yeah.
Here, but I'm not impressed.
It's been quite underwhelming.
With Siri, right? I mean, I've got the, not only am I invested in it, but I have its products. I am an Apple household.
Yeah, and like I'll say, I'm actually someone who is a big user of like the Mac line. So I have a MacBook Pro and a MacBook Air. So I think the laptops.
The Air is great.
Yeah, and the laptops have continued to be really at the front edge, like
Yeah.
especially with everything post Apple Silicon has been absolutely amazing for performance. I think if I look at phones, I just haven't really seen the appeal of switching over to an iPhone.
I mean, I don't think it's anything like crisis anywhere near that. But the point that
I mean, it's
until-
richly valued, right?
It is richly valued, and also, it's still got, worldwide appeal for, people who want the stock. So there's always going to be demand there. But, some of the tools like Siri, you find that it's really behind some of the AI searches.
Yeah.
And you can ask it a question and just say, well, I can't find that, or it doesn't get it for you. It mishears your question.
Yeah.
So it feels like they've been behind the curve.
I agree. So I think it'll be one definitely worth watching. If we go back to the slide, I know the producer Phil might be able to.
Producer Phil and James, put up the slide for us, please.
So I think the second thing from an earnings side is the state of the consumer, and I think we're seeing basically two big sets of signals about the state of the consumer. We have a bunch of consumer brands. So we've got Coca-Cola, we've got Domino's on Monday, always an interesting one, a Buffett stock.
Buffett, yeah, he liked pools and dominoes.
yeah,
Remember the last time he rejigged his...
Yeah, we've got McDonald's next week. And so I think you've got a lot of those consumer names. You've got Yum Brands who own KFC. And so I think we'll see those. And then we'll also see a lot of the payments companies. So we have Visa, we have PayPal, we have MasterCard. And so I think both of those will be really strong signals of how has the consumer been feeling over the last quarter. Are we seeing like-for-like volumes better, or the value of purchases change on average over the last quarter? I think as we've seen some of the signals coming out from consumer sentiment surveys, we're starting to hear consumers start to get worried. And the question is, did that materialize in last quarter's earnings or not? And do they give any guidance for the future? A lot of companies, especially kind of consumer facing companies, have opted to not give guidance so far, given some of the uncertainty.
So don't disappoint.
Right, but actually, if you look at a McDonald's or you look at a kind of Coca-Cola, there's a question to me on how impacted are they really by the tariffs? The answer is probably yes, but not quite as much as like a car company, for example.
Yeah.
So we'll see, I guess, whether they give earnings guidance or not.
Yeah, some have come out and been quite specific already, like Intel CFO saying that the tariffs are now increasing the chances for an economic slowdown. Just want to whack up this chart here for Issa and for Trader Friends to look at. Do you think a lot of the consumer data is going to reflect this growing? This is from FactSet.
Yeah, this is this year's earning expectations, right?
Yeah.
They've kind of definitely cooled down. I think if you also open the GDP Now forecast, you can see almost exactly the same thing with GDP projections, which takes us kind of nicely on to some of the macro stuff for next week as well. So from the US side, we are getting quite a lot of data. So we've got jobs data and we've got GDP data and we've got PCE data. So I think of all of those, I actually think jobs data and PCE data is not going to be the stuff that is going to be market moving. I do think the GDP number will be really interesting. And so you can see actually GDP Now's forecast, which are the Atlanta Fed's forecast of where GDP is, even if you adjust for some of the weirdness in the gold market, is pretty weak for Q1. And actually, you can see that a lot of the consensus forecasts started very strong and have been kind of tending towards those Atlanta Fed forecasts. And actually, a lot of people are now assuming it's going to be sub 1% growth. And so we'll see what that number looks like. I think that number is often subject to revision. So it's obviously just the first data pull. But if it's sub 1% growth, I think that's definitely indicative of a slowdown.
Yeah. So that hearing you say this makes me think that maybe the banks out there with their projections for the S&P 500, they're still
pretty aggressive.
Yeah, they're still pretty aggressive.
I think we did the little exercise with Rich last week where we had the table, what multiple you believe will have, and then what the earnings forecast will be. And I think it was something like consensus earning forecast with a 19 PE only ends us at like 5,200 for the year.
It's so punchy, right?
Yeah, and actually, I don't know. I think we've seen quite an aggressive couple of days from the markets. I wouldn't be surprised if you get a weak GDP print to see some of that cool down a little bit. So that is the US from a macro side. In the last couple of minutes, we also have a bit of macro news from around the world. We have a Bank of Japan rate decision that's coming on Thursday. That will be definitely one for the people who are kind of trying to track the carry trade and Japan dynamics that are maybe going on. And then we'll get the Eurozone flash inflation on Friday, which is kind of the consolidated CPI, harmonized CPI number across the Eurozone. And so I think it is going to be kind of a big week. I think it's going to be a bigger week on earnings than it is going to be on the macro front. That being said, I am definitely looking at the US GDP number.
30 seconds to go. So I want to throw my thesis at you.
Okay.
Because I love trading the earnings season, just because it's exciting. You know exactly when the print's going to come out. You're ready.
Not being short of volatility.
Yeah, well, it could be an exciting week again, but I trade the fact, and I like the safer but later.
Yeah.
Right. And sometimes it's the pullback is where the action is.
Yeah.
Not the initial reaction. But my mindset next week is like a yes but no. So the earnings come out and beats better than expected.
Yeah.
But tariffs or outlook or something will come out a bit after.
And honestly, I'm much, much more bullish your B2B large SaaS players like Google, like Microsoft, like Amazon, and actually maybe even not Amazon. And I'm less bullish a lot of these consumer-facing tech companies like Apple and the consumer side of the Amazon business. So I think I honestly think this is one of those earnings calendars where you look at it and it could really go, like, I think they always try and sandbag expectations so that they can beat. But I actually do think this is quite an uncertain period for a lot of these equities. Like you say, there's tariff uncertainty. So we have Wednesday and Thursday are going to be really big data days because we've got the GDP and the PCE for the US on Wednesday, with Microsoft and Meta also on Wednesday. And then Thursday, you've got the Bank of Japan rate decision, and then Apple and Amazon and MasterCard and Eli Lilly. And so I just think Wednesday and Thursday, implied vol is going to be heightened. You're likely to see market moves. We are now 18% of the way through the 90-day pause in tariffs. And I've yet to hear a single trade deal. That doesn't mean they're not coming, but that window is starting to look slightly narrow. And so, okay, give or take 20% of your time is gone. So if we don't start hearing news on Monday or Tuesday or Wednesday or Thursday, I think people are going to start feeling a bit uncomfortable by the time we get towards the end of next week.
I think Trump's going to kick the bucket, kick the ball,
Another 90 days?
Yeah.
I don't know though. I think the news we've heard from China has been really back and forth, right? Like, are they talking? Are they not talking? Do they want to give exemptions or lower the rates? Do they not? It's like, I think it is just a period of heightened uncertainty, and as much as that makes it very hard to trade sometimes, like, we just have to be honest with ourselves. I don't think that uncertainty is going away.
No, and just when we think there is certainty, it'll just turn on its head again.
Yeah, it change is the only constant at the moment.
Yeah, and so on that note, the one key date as they are waving us goodbye with Issar and Anchea, May 15th is that date to look for. But he might kick the deadline again. Who knows?
Yeah, down the road.
Yeah. But on that note,
have an amazing weekend. Have a great weekend, everyone.
All right.